week, I explained to you guys about the broadening wedge, and I gave some interesting stats. I explained to you guys about 65% of these patterns tend to be, or 65% of the time, they tend to be a reversal pattern, which means that if it keeps on chopping and it falls below this bottom trend line, and let's make that line nice and bright, you can expect a downside. And then we also looked at targets around 36. But I also pointed out to you guys that we can be chopping and ranging within this for an indefinite amount of time. It doesn't mean that it has to happen now. And then as a cautionary tale, because there's a failure rate with everything out there, as a cautionary tale, should we get above this, we've got an 85% chance that we won't fall back in. Then it's bull market and big money. Now, we had an amazing week. I shared my thoughts a little bit earlier and about where I see it. So Bitcoin's almost 42K. I have not ruled out the dump to 32K. Let's do not this. I did not rule the dump out to 32K, so we can still have that 32K by the dip. And we need to understand that even if we're extremely bullish, that within a bull cycle, each and every one of these bull cycles, there's always a plus minus or a plus 30% Bitcoin correction. So if you miss this bus, wait for the next one. Don't try and jump onto the tracks and run after the bloody thing, because the next train's going to run you over. Do your hodl bags a favor and subscribe today. Double down, hit that like and notification icon, and let's get charting. I've been saying to you guys, and take note, Bitcoin on the weekly time frame, guys. This is hodl time frame. This is your spot alts we're talking about. Nothing bearish. I explained to you guys that we can go to 42K and then only come back. And it seems like that is becoming a reality. BTC wants to go to 42K. Well, it's there already. And maybe it can go a little bit higher. So so let's look at that a little bit higher then. Okay, so I'm going to go to Bitcoin on the daily for that. So if we look at Bitcoin on the daily time frame and we apply our supply and demand waves, take this line, move it to the last time we had hell of a lot of supply and a hell of a lot of demand, which kind of brings us into this zone here. So you can put it there, you can put it there, and you can put it there, and you can put it there. Now, why all these lines? A simple level-headed bloke would say, well, if you put enough lines on the screen, Rudo, the price is bound to hit it. That is correct. But the idea with this is not to find the next destination, the end destination. It's like to find a destination roadmap. Trading, the best we can do is try and identify highest probable areas. And once we're there, then try and make a decision. Otherwise, you're constantly going to ask yourself, is this the top? Is this the top? Is this the top? No, is this not the top? And that's what we're trying to avoid. So we're trying to look for the highest probability areas where the market would want to turn around. So if we look at this, where we are now, this daily still has potential to do what? To go tag that 42,800, to go a little bit above 42,800. On the daily time frame, what this is telling me and should be telling you is that there's a hell of a lot of momentum here, but there's still strong bearish divergence at play. But we know how to navigate this. It means nothing. It means that there's strong bullish momentum. But the line we now need to draw in the sand is 37,400. Previously, the line was 34,300. So should you be holding long positions and you would want to move up a stop, what this means is your stop was supposed to be below that. Now your stop needs to be below this. You can secure a little bit more gains. That's it. Now, next target, simply put, would be easily identified if we actually head over to the CME chart. Now, the CME created yet another gap. Now, we know how the saying goes, CME gaps tend to get filled. Now, if you look at this from the past, there's a CME gap, there's a CME gap, they tend to get filled. Yes, same thing again. If you draw enough boxes, they might get crossed. But the reality is we're trying to look for a destination map, just to try and see how and until where we can manage our expectations. So we've got a gap still sitting at the top at 52. And the potential is that once we get to that 52K area, we might have a reaction. So who is to say that where prices now, we can't go all the way to 52K and then only come back. Ultimately, we know that bear market reversals or bull market reversals can be anything between 24%, 20%, and up to 30%. There's a 35%. So the bull market reversals tend to be in the 30% range. Why? Because if there's not enough discount, there's not enough new buyers coming in. So keep context of how this works. And we can go and backtest this and look at this. All these retraces, you can go and measure them top to bottom. There's a 22%er. Okay. It looks insignificant today, but I promise you, if you were going through those 4 weeks, things were looking horrible all of a sudden. Everything is down 22%, and the alts most probably were bleeding further. Now, back to this chart. Just as a cautionary tale, remember, if there was a 100% guarantee, I would not have to tell you the other side of it. But there isn't a 100% guarantee. I showed you that the daily is giving us a strong bearish divergence, which is ultimately a reversal divergence. Now, where's my little divergence image? I just moved it before we went live, which is ultimately a reversal divergence. So you need to take things serious. You need to say, okay, there's a potential that it's going to turn. So to get back to this monthly time frame, Bitcoin's got a job to do. It needs to sweep 49K, or else hidden bearish divergence is going to give us another attempt down. It doesn't mean that we're going to make a lower low. It just means that the bears are still thinking there's a potential bear market trend. Break this, BTC goes above 48, above that, deletes this divergence. Then the next retrace is going to be met with a lot more enthusiasm, and it might be a shallower retrace, which means that we just need to rethink where we want to buy. Best example I can give you is if we look at like this now, and let's say we stop at there, and I'm just going to put it a normal fib, normal retracement fib in there. Then 34K, thou shalt not cross line, is a potential bounce point. But as soon as we start moving it over, $23,600, $43,000 become a more probable, because you would want the trend to continue. That's the difference between thinking about a shallow retrace versus a deep retrace. That's the mindset behind that. So in conclusion, BTC, I want to show you this hidden bullish divergence, which is now played out. And that's why I'm thinking that just before we celebrate too much, I still feel like the alts are still going to give us more gains. If you've got alts, stay tuned for the second half of the stream, because that's where they're going to come in. But the BTC side has had the following things. We've had hidden bullish divergence consistently play out. Okay, so although we had all the strong bearish divergence on BTC, I was saying to you guys, think there's more. Think there's more. Why? Because of this. Okay, hidden is the strongest kind of divergence there is. It's the continuation of trend divergence. So price makes a higher low, but the oscillator, your RSI, goes in the opposite direction, kind of tricking you, because normally this also coincides with strong bearish divergence happening because the oscillator is trending down. Makes sense. The oscillator is making lower lows, prices making higher lows. So it kind of tricks you in a sense. And that's where a lot of beginner traders actually trip up. So back to this chart. Now that we have this divergence play out, the next question is, when there's a retracement, will we have some sort of a continuation divergence? And to bring this full circle back to our original pattern, this means you're allowed to be bullish all the way back down to 38K. But once we go below 38K, we will potentially break out of the broadening wedge. Then this 65% breakdown statistic is going to kick back in. And we know that when we fall below this, that then turns to 85% for continuation, which means it's just going to take us to our buy zone. Okay. If, for instance, the rest of the week remains as bullish as this, and we start getting above this, forget about this, guys, and dream big, because then 48, 52 could come in a snap. Okay. Make sure to go share the video with friends, help grow the YouTube channel. You're in control with that. And remember, as always, to keep on hustling, guys.
I'll keep hustling.